So, as a reminder, Thursday we are not meeting. I think what I'm gonna do, so we've got 2 days listed for midterm review. And let's see. Lexi, right? Okay. 2 days listed for midterm review. I think what I'm going to do is extend this chapter 3 into one of those days since I'm going to be gone on Thursday. I'm on a hiring committee and we're doing interviews on that day, so I'm not able to be here this Thursday. So I think that's what I'm going to do. I had mentioned earlier giving you guys kind of an extra assignment to work on in your group, and still going to do that, but I'll probably do it for some extra credit if you guys don't mind that. So not meeting on Thursday in class, but I will give you an assignment that pertains to chapter 3 as a group for some extra credit points, okay? I won't be too strenuous on you, I promise. So any questions about the schedule? So again, we're continuing chapter 3, and then we'll kind of extend some of it probably into that day, but we'll also do some midterm exam review. We'll just kind of see how much time we have. I know I've had a lot of email questions about this chapter regarding the homework. There's some intricacies. I do want to point out there's one problem on the homework where I think the publisher has made an error. So if one of those 941 forms, if you've started doing any of those yet, which we haven't talked about those yet in class, but if you've started doing those, there's one of those problems where there seems to be an issue with a number not carrying over properly to the other form. So I'll point that one out to you. I have sent a message to the publisher. Have you started working on that? You look like you're...
Yeah, that's like the only questions that I have left on the chapter 3 homework are
Okay.
the 941 forms.
Yeah.
And like I'm stuck on the fractions of seconds.
Oh, yeah.
Because I can't, in my brain, won't comprehend how to like calculate it.
Mm-hmm.
And so the email that you sent out last night, I was like, okay, is this what? And then I saw that it's in the announcements as well.
Mm-hmm.
So I didn't know if that's how you calculated it.
Oh, no, in fact, the emails I don't think I sent any information really about the 941s yet.
I just emailed you last night about it.
Okay, yes, you did, and I had gone to bed.
Well,
in
so I
between.
emailed you and then I had gotten that one. And
Oh,
I
okay.
And I was like, I'm like, okay, is this how I calculate it? And then I realized it was an announcement. I was like,
Okay.
okay, I don't think that's how you calculate it.
Yeah, I sent out, so this one, you've got the extra mile problem. I got a lot of questions about that one. The one where you've got I know in my example it was Rob Gronkowski. I don't know if that was for everybody, but he has W-2 income and then he's got a side hustle and calculating that. I had a lot of questions about that, so I plan on going through that calculation a little bit more, but I gave you some steps. There are essentially 3 sub-calculations that you need to do and then add them all up together in order to get that answer. This one, no, this does not pertain to the 941. So this one so there's other questions that came up where you've got a list of employees and their individual pay for that pay period, totaling up what their OASDI and the employer's OASDI and Medicare tax are. Then you're supposed to total all of those together, and then you also have to calculate what the employer's portion is. My point with that one, and I'll go through an example of that type of problem as well, is that sometimes when you're totaling each individual employee and then you're totaling all employees, sometimes the result of that is going to be different, just slightly, from the amount that the employer has to contribute. And that simply has to do with math. The fact that you are on a per employee basis, you are multiplying their wages by a percentage, and then you're adding all of those results up. Whereas with the employer, you're taking the whole number and multiplying that by a percentage. So sometimes you'll get some differences between those. Usually it's only, if there is, it's usually only 1 or 2 cents difference. So I'll go through one of those as well. And then this one, some steps. And I tell you why, this is why I ended up going to bed, because trying to put this together so that it was understandable. These steps for calculating the current period OASDI and HI tax when you've got prior period information and they're starting to exceed that wage base. Okay, so and we can go through one of those as well. What I want to do first, though, if we can, I gotta pull up the. Because we need to also, I mean, we'll still do some calculations, but we also need to talk a little bit about the deposit schedule and the filing schedule for that Form 941. And I'll kind of introduce you to the 941. I know, like I said, a lot of you have already started working on some of those problems or are almost finished with them, which is great. The homework's not due till, is it next Tuesday? I think it was, so that's fantastic. And it's good that you're not waiting till the last minute, because it's a lot of work. I know it's a lot of work. But I do want to, we do need to go through some of the other deposit schedules, filing schedules, look at that 941, talk about how it's filled out. I thought we'd do an example, which is actually one of your homework problems. So if you follow along today, you'll get some help with one of your homework problems. So let's see here. I'm sorry, I'm trying to find the. Okay, I think this is where we left off. With regard to self-employment, independent contractors and how that is all calculated. I know you've probably already done a lot of those calculations in your homework, but we'll just kind of review it. First off, the self-employment tax, that FICA tax, remember, the self-employed individual is paying both halves of that tax. So what the employer and the employee usually share, the self-employed person is now paying all of it themselves. So, but it only starts really when net earnings, not gross earnings, net earnings exceed $400. If it's under $400, you don't have, in total for the year, so that could be multiple jobs. If you've got one job that paid you $250, another job that paid you $200, each of those is under $400, but together it's over $400. So that then that self-employment tax would apply. So if the net earnings, which is gross minus expenses, exceed $400, that's when that self-employment tax kicks in. Okay, and you see that on the actual 1040 form, the tax return. So if there is more than one self-employment business, you do get to offset losses and income. So if you have one business that has a net loss of, say, $1,000, and you have another self-employment business or your independent contractor that has income of $2,000, you can combine those two, and now you have net income of $1,000. That means that $1,000 loss on the one business is going to save you on self-employment tax on the other business, right? So you can combine those, and remember as well that, and your book talks about this, I'm not sure that I really emphasized it in lectures, partnerships. So partners in partnerships are not employees. They do not receive a W-2. The partnership does not act as an employer for partners. Now, there can be employees in partnerships as well, but those partners, those owners of partnerships, are not employees. They actually pay self-employment tax. So the partnership doesn't withhold any amounts from payments that they issue to partners. The partner is responsible for making those payments as though they were a self-employed individual. Because essentially, a partnership is kind of like, it's like a self-employed, you're like a self-employed individual, but you're not an individual, you have a partner. There's another person, at least one other person involved there. So for tax purposes, they're treated the same. I emphasize that because there is at least one question in your homework that has some partners where you're supposed to calculate how much withholding. And of course, they're not employees. So therefore, you can come to your own conclusion about that. So again, that self-employed tax rate in total for Social Security and Medicare tax is 15.3%. Okay. Again, 12.4% for OSDI, 2.9% for the health insurance portion, plus if self-employment, if total income exceeds $200,000, whether that's through W-2 income or self-employment income or some combination of the two, once you reach that $200,000, that additional Medicare tax starts to kick in as well, that 0.9%. We mentioned here you can have W-2 and self-employment income. That cap of 142.8 applies to all income in total. So if you have, and this is just kind of a little extra, when you take the income tax class, which I'm sure all of you will do at some point, you'll get more into how that self-employment income is reported. It's reported on what's called a Schedule C as part of the Form 1040, the income tax form. It acts like an income statement. You've got income and then all of your deductible expenses. Your net income then, after you do all of those calculations, is then what is subject to that self-employment tax. There's an additional form with the 1040 called the Schedule SE. That's where that self-employment tax is calculated. And that again is just part of the income tax form. We don't go through that here. We're mainly, obviously in this class, we're mainly concerned with employees, right? But it is important for you just for information purposes to know about that self-employment tax. So now we're gonna do an example of how to calculate when an individual has W-2 income and has self-employment income. All right, so this one's fairly easy, right? Take a look at it. So Celia has W-2 income of $150,000. Is she already over the cap, the wage base? Sorry, I call it a cap. Wage base, they call it, but yeah. Is she already over it? Yeah. Exactly. She's made $150,000 through her W-2. In fact, her employer has stopped withholding Social Security tax on her wages, right? Toward the end of the year, they would stop. So the question is, on her self-employment income of $15,000, how much is her FICA tax? Her FICA is Social Security and Medicare combined. How would we calculate that? So we've got, remember for FICA tax, and this is what we're talking about here. Social Security portion, otherwise known as OASBI, would be 12.4%, and the Medicare portion, Medicare, is 2.9%. Base is 142.8. All right, so all we're concerned concerned about with this question is that $15,000 of self-employment tax. How much tax is she gonna have to pay on that? First off, is she gonna have to pay any social security tax on it? No, because she's already over that wage base of 142.8. So we don't have to worry about the 12.4%. That's a huge savings for her, right? What about the Medicare portion? Kelsey's nodding. Yes, yes. She's got to pay tax. She's got to pay Medicare tax on that $15,000. So how much tax? Tell me the calculation here.
50,000 times 0.029.
Right. Oh, well, I mean, they got the answer up there for you, but we need to go through it. So 15,000 times 0.029, that's where you get that $435. That's all she's gonna pay. Now, she's gonna pay income tax as well, but we're just concerning ourselves with those payroll taxes. All right, so that one's pretty simple. All right, let's look at this calculation here. So now we've got Prebin. Never heard of that name. Prebin's W-2, $68,250. All right, so this is getting a little more complex. His self-employment income is $94,500. So his W-2 job is actually his side hustle. Either that or he's doing something where he's making a lot of money on his own and not having to work too hard. So how much is his FICA on that $94,000? Okay, this is actually wiping now. If they replaced it. All right. So let's take a look at, this is where we can test out my calculation. Let's see if it works. All right. So our step one, I'm gonna do it here. Just want to make this small enough so I can see both. All right, so we're going to calculate the FICA on the W-2 wages. Oh, this is when they're over. Sorry, that doesn't work for them, for this one, because he's not over. All right, this one I didn't really put up a step-by-step on this one. But so the first thing we're going to do is figure out how much OASDI tax, and then we need to figure out as well how much Medicare tax is due. So his $68,250, I guess we could do it this way, the $68,250, or is that what the question is? How much is it? Oh, I'm sorry. So his FICA on the $94,500 is what they want to know. So we'll take the $142,800 minus the $68,250. So how much has already been subject to FICA tax, right? Or Social Security, right? So what he has remained, yes, all of that has been subject to Social Security and Medicare tax. The amount remaining for his Social Security tax is $74,550, right? All of the $94,500 is going to be subject to Medicare tax, right? All of it. That's the easy part. Social Security is the one that we've got issues with. So of that $94,500, $74,550 is going to be subject to the Social Security, that 12.4% Social Security tax. And that's how we're gonna do the calculation. So $74,550 times the 12.4, or OASDI alone, $92,4420. Be careful. I think a lot of students, when they're doing this, when there's W-2 income and there's self-employment income, they're multiplying this by 6.2%. They're forgetting that that's doubled. So that might be one, if you're doing these problems and you're having trouble getting to the right number, that might be one thing to check. Make sure you're using the correct tax rate for self-employment. Times the 12.4, 9244.20, and then the 94,500 is what's subject to the 2.9% of Medicare tax. Okay, add those two together, and you get the result. There are questions about this. So if the question were to ask how much in total, which I think is what that extra mile question is asking, how much in total, let's try and pull this up again. So calculate, let's see if we can get to the total amount here using this, using my steps. I'm not guaranteeing it, because, like I said, it was late when I was putting these together. So calculate the FICA, OSCI, and Medicare on the W-2 wages only. Just the employee portion, which is what your extra mile question is asking for. It's not asking for both halves, it's just asking for the employee portion. So what's the FICA, the employee portion of FICA on this, the self-employment, or the W-2 wages? So how would we do that? 60 times, so we can do it separately or we could do it together. We can take the OASDI tax rate, figure out Social Security. We can take the Medicare tax rate, figure out Medicare. We could also just combine the percentages. So if we take 6.2% for Social Security plus the 1.45% for Medicare tax, we get 7.65%. That saves us a step if we can do that. So times 0.0765. So this is wages, W-2. $29,2613.
You typed in 38,000, not 68,000.
Oh, did I? Thank you. Thanks for catching that. 5221.13. All right. So there's that portion. Now calculate the Medicare tax on total self-employment earnings. All right. So Medicare tax on, whoops, 94,500. What's the tax rate on that?
15.3.
Medicare. Let's just look at the Medicare portion right now.
Medicare, the HR, right?
The HI, yep. 2.9%, right? 0.029. So 94,500. We're gonna leave the hardest part for last. Whoops. $27.40.50. All right. Now subtract the wage base from the W-2 earnings and calculate the full FICA tax on that portion. All right, which is what we did here, the 74,550. Right, so we would take the 142,800 minus W-2 earnings 68,250. With that result. And then we're going to calculate the FICA tax, 0.124 on that difference, which is the same thing as we did here. So But 142,800 minus 68,250, 74,550 times 0.124, 92,4420. And then add all those together. 17,205.83. That's what that extra mile question is asking. Different from what's on the slide. This is how the extra mile question is phrased. What's the total amount? Yeah, go ahead.
What's the 7.65 what taxes is that for?
So this, all I did was combined the two taxes. So this is the 6.2% for Social Security plus 1.45% for Medicare or HI. If you add those two together, it's 7.65%. You can do it either way. You can calculate the Social Security tax on the 68,250 and then calculate the Medicare tax on the 68,250 and then add them together. Or you can just add the percentages together and multiply that by the 68,250.
Why do we just do the employee portion for that, but when we do the Medicare, we do the full 2.9%?
Because this is self-employment income. This is wages. So this is SE income. Yep, and so 2.9%, they're paying both halves of that 1.45%. So the tax rate is different. It's doubled. When you're self-employed, that Social Security tax rate is doubled. The Medicare tax rate is doubled. Does that make sense? Okay. Other questions? No? So again, that's how when you're doing that extra mile problem in your homework, that's what they're asking for. It's not real explicit that they're only asking for the employee's portion of this of the Social Security and Medicare tax. So just wanted to make that clear. Okay. Other questions before we move on? All right. Let's go on then. Okay, so a couple of forms that you need to be familiar with. An SS4 form. This is a form that entities will use when you first form a business and you need a Social Security or an employer identification number. Employer identification number is essentially, it acts like a Social Security number for businesses. Okay, it's oftentimes abbreviated as EIN, employer identification number. Like I said, it's like a Social Security number for businesses. And it is required for businesses that they have one. Well, usually if you want to open a bank account for your business, they're going to require you to have an EIN. If you hire employees, you have to have an EIN. If you're filing a separate tax return for your business, so if it's a partnership, if it's an S corporation, if it's a C corporation, if it's a nonprofit organization, estates and trusts, any type of entity that needs its own tax return has to have an EIN. Now that means there are certain types of entities that aren't required to have EINs. If you are a sole proprietor, you're the only person that owns the business, and you're not organized as a limited liability company or an LLC, there's no requirement for you to have an EIN unless you're hiring employees. You can also be a sole owner of a limited liability company. As long as you are being taxed like you're a sole proprietor, you also don't have to have an EIN unless you're hiring employees. But any entity that hires employees has to have its own EIN, employer identification number. It's a super simple form that is filled out. It can be filled out online and submitted, and you immediately get back an employer identification number. Application for Social Security card, if you're missing your Social Security card, you can file this form SS5, so separate from the SS4, but both have to do with getting those identification numbers. Okay? There is a verification service that individuals can, or businesses can use to verify that the person who claims to be the person on the Social Security card, that the Social Security number matches that name. Okay? As we all know, Social Security numbers are highly subject to fraud and to theft, and so employers do have a way to verify those Social Security numbers. Okay, so the Form 941 is, so there are two pieces, let me say, two pieces to reporting the information to the IRS. So we've got the actual deposit of the funds that has to occur. So the employer has withheld these funds, right? We've done the calculation to figure out how much to withhold. So the employer has the money. They obviously can't just keep the money. They're going to have to give it to the IRS. There is a particular schedule for remitting those funds to the IRS, which we're going to talk about. There is another schedule for reporting the funds to the IRS. It kind of acts, it's sort of like employees, every pay period they have an amount withheld, right? That's their payment of taxes, having money withheld from their paycheck. And then at the end of the year, they report how much tax they should have paid on the tax return, on the Form 1040, right? Once a year, by April 15th, unless you file an extension, by April 15th, we all file our tax returns. So that tax return is like a reconciliation of what you've already paid. You're looking at what you've already paid, and then the reconciliation part is how much should I have paid? Did I pay enough in? No, you gotta pay more. Did I pay too much in? Yes, and then I get a refund, right? The 941 and the deposits work in sort of the same manner. Okay, the deposits are like the withholding schedule. They're not the same as the withholding schedule, but it's just that those payments are happening on one particular schedule. But the reporting of how much should have been paid is done on this Form 941. Now, the 941 is not an annual form like the 1040 is. The 941 is a quarterly form. So businesses have to file these Form 941s every quarter. Okay? They're due, so because it's on a quarterly basis, they're due January 31st, April 30th, July 31st, and October 31st. So they give you a month to prepare it, essentially. So the first quarter, quarter one, is filed January 1st, and this would encompass payroll from October 1st through December 31st. So any payroll that happened during that time, the 941, again, this is just 941. The 941 for that period has to be submitted by, January 31st. I give you 1 day to submit it. All right, quarter 2 is due April 30th, and this is for January 1st payroll through March 31st. Quarter 3 is due July 31st, and this was for April 1st through June 30th. Quarter 4 is due October 31st, and is from July 1st through September 30th. Those are the 4 quarters, and so this is the due date. And this is for payroll encompassing each of these dates. 4 times a year, these have to be filed. So you can imagine the payroll department, when they're not doing payroll, is preparing forms like this on a quarterly basis. So they have to make sure that, and that's the 941 that you guys have in your homework. You've got several of those that you've got to fill out, right? If it, and as I point out here, so if this date falls on a weekend or a holiday, then it's due the next business day. And that is true of all due dates with regard to the IRS. It's always going to be due the next business day. We've had the last few years have been crazy, and the due dates have changed for the income tax forms. But a lot of times, April 15th doesn't fall on one of the business days during the week. If it falls on a Saturday, then we would wait until the following Monday, and that would be the due date for tax returns. Okay. But the same is true then of these 941 forms. Okay, so I just mentioned these is quarterly reporting. There is an annual form, but it doesn't cover very many employers. If your total payroll taxes, that would include income tax withholding, both halves of the Social Security tax, employer and employee, both halves of the Medicare tax, employer and employee, if that is $1,000 or less, then you don't have to file this form. You can file what's called a 944 and do it once a year. Now, for our purposes, if you're ever going to work in payroll, you're probably never going to file a form 944 because that's going to be for very small employers, right? If they have 1,000, it's really simple, really easy to get up to $1,000 in payroll taxes. There is withholding on other types of income as well. Pensions and IRA distributions will oftentimes have federal withholding, so they have to also file forms to report that withholding. That's on Form 945. Okay. Again, that's not pertaining to employment taxes. That's pertaining just to income taxes, so it'd be a little bit different. So there are a couple of other different forms. We're not going to really concern ourselves with those, though. This is the big one, the 941. All right, questions about that schedule? No? All right, so let's talk about, this is the reporting schedule. We also have a separate schedule for making the deposits. And the deposit schedule depends on how much we owe. Now, the IRS is just like everybody else. The more you owe them, the faster they want their money, right? If somebody owes you $10,000, you'd like to have that $10,000 back pretty quick. If somebody owes you $10, you could maybe wait a little while on that. That's not gonna make or break you, $10. But 10,000, yeah, you're really missing that. So the IRS is the same. The more you owe, the faster they want that money. Okay? And so we have different filing or different deposit schedules based on how much is owed. Now, to start out with, let's just say we're a new employer. We're brand new. We just got our EIN. We hired some employees. We don't really know how much we're going to owe at this point. We have no history to look back on as to, how much we're going to owe for each pay period. So the IRS is going to start us out on a monthly pay period. A monthly deposit schedule. So that's how they're going to start us out. Once we have some history though, the IRS is going to look back at what our payments were each month, and they're going to total up during this, what they call look back period, how much we paid, and then they're going to tell us, okay, either you could stay as a monthly depositor, maybe we want you to move you to a semi-weekly depositor, maybe you only have to be a quarterly depositor. Once they've looked back at the schedule. So that look back schedule, let's see, is it's from July to June. Yeah, I guess they don't have a slide for it. Your book talks about it, but that look back schedule, what they would do is look back. So right now, let's see, it's October. This November, the IRS is going to notify businesses. They're going to look back at their payments from July 1st, 2021 through June 30th, 2022. And in November, IRS notifies November 2022 frequency of payments, or deposits, I should say, for 2023. So starting in January. So the IRS is going to is probably right now, they're looking back at how much was paid for each of these businesses during this span of time. The business will be notified next month that starting in 2023, this is how frequently they have to deposit their funds, their payroll taxes. Those payroll taxes would include income taxes that were withheld from employee paychecks, which next chapter we're going to talk about how that withholding is calculated. It would include the Social Security taxes that have been withheld using the calculations we've talked about here. Both the employer and employee portions would be included in that. And then also the Medicare taxes that have been withheld, both the employer and the employee portion as well. So that's what's being deposited, are those amounts. Partially what the employer owes, partially what the employee has had withheld from their paycheck. Okay? Now let's talk questions about that. This is the look back period. Okay. So, but like I said, initially, if you don't have this look back period, if we just started our business now, we have no look back period, right? We didn't exist back then, so we're going to start out as a monthly depositor. So, go ahead.
Does that start like January 1st of 2023, and then they would make the deposits, like, let's say it was quarterly, they would make it?
Then they would make it, yes, they would make it by the end of that quarter. Yep. And if you're a quarterly depositor, you can make that payment with the 941. So you can have the same schedule as actually filing those 941s. Okay? But that's the only time that happens. Monthly depositors, and you'll see on the 941, if you actually read the 941 and looked at it, part 2, I'll pull it up for you. It's got this information right there. So let's take a look at it. So in part 2 here, let me make this bigger, because that's awfully tiny. All of this information here is to determine how frequently you're supposed to make deposits. So the very first one, you check one of these. Line 12 on this return. If line 12, take a look at what line 12 is. Line 12 is where we have calculated the taxes, total taxes. That includes income taxes withheld, Social Security taxes withheld, Medicare taxes withheld, Social Security taxes owed by the employer, Medicare taxes owed by the employer. So all of those taxes would be included in that. If it's less than $2,500 on line 12, or last quarter was less than $2,500, then you would check this box, and you only have to file every quarter. So if line 12 for the prior quarter was less than 2,500, but line 12, okay, so this is go to part 3. And this is where you could just pay it on a quarterly basis. So that's if the amount that's owed is less than $2,500. Again, that's kind of hard. That's over an entire quarter. So that's a really small amount of money for somebody who has an employer. Yeah.
So is this the amount of money that you're paying for your taxes that you owe? Or what
It's-
are you paying for?
You're paying the taxes that have been withheld. So these are all payroll taxes. So everything, not income taxes. Income tax, don't think about what the business owes in income taxes. That's a separate tax, and it's based on what their net income is. This is all related to employees. So the taxes included, probably not gonna make it. Missed. Taxes included. When I say payroll taxes, I'm talking about income taxes withheld. So those income taxes that are withheld from employee paychecks, these are the income taxes that the employees are going to have to pay. Their income taxes. Income tax withholding, OASDI, both the employer and the employee portion, and Medicare tax, both the employer and the employee portion, and if it applies, any additional Medicare tax that was withheld from employee paychecks. That's what's being reported on the 941. And that's what's being paid as well per this deposit schedule. These all pertain to the employees, not the business itself. I said the business itself is going to pay, if it's required to pay income taxes, it's going to do that separately. And we're not going to concern ourselves with that at all. This is only pertaining to what the employees have had withheld from their paychecks. So if this in total for the quarter is less than $2,500, then the employer only has to make those deposits on a quarterly basis with the 941. When they file that 941, they make the payment. Okay, if it's less than $2,500. Does that make sense? Questions right now? All right. So, So again, if it is, I can never remember which way it goes. 2,500. Pay quarterly. With the 941. All right. I don't think you have any problems that have anybody paying quarterly. Okay. These are very small businesses. Only have maybe a couple of employees. Okay. Now, what happens if they owed more than $2,500? We get on a different payment schedule then. So, if they owed, let's go back to the 941. So it shows it pretty well. The next schedule is the monthly schedule depositor. And remember, for a monthly schedule depositor, if they when they start out, when a business starts out, they're automatically a monthly schedule depositor. So if it's between 2,500 equal to or greater than 2,500, well, I'm just gonna do it this way. I'm not very good at these equal to or greater than things. So between 2,500 to 50,000, pay monthly. Between 50,000, this is the one that's confusing, and 100,000, semi-weekly. All right. So if you pay monthly, you pay by the 15th of the following month. So we're in October right now. What is this? October 4th. September just ended. Monthly depositors, and again, this is the deposit schedule. Monthly depositors for the month of September would be paying then the amount that they collected during September. They pay it by October 15th. Yeah.
So do they pay the amount that they collected from the employee plus their portion all at
Yes.
once?
Yes. Yep. All at the same time. Exactly. So they're paying all of that amount. So you can see how $2,500 or $1,000, if that was for the whole year, that's a really low amount of money. Right? I'm not sure it's even worth having employees if that's all you're collecting. So monthly scheduled depositors pay by 15th of the following month. October, they're going to pay by November 15th. November, they're going to pay by December 15th, and so on and so forth. Unless, of course, the 15th falls on a weekend or a holiday, and then it would be by the next business day that they would make that payment. Semi-weekly, this one's kind of confusing. Because when we think of semi-weekly, we think, oh, well, I have to pay twice a week, right? Semi-weekly would be, that's not how it works. The IRS receives payments 2 times a week. So that semi-weekly is from the perspective of the IRS. And with the semi-weekly, it depends on when your payday is, when you have to make the deposit. So if your payday is Wednesday, Thursday, or Friday, so payday, Wednesday, Thursday, or Friday, then you have to pay by the following Wednesday. All right, Wednesday, Thursday, Friday. So if somebody's getting paid today, well, today's Tuesday, so it's not Wednesday, Thursday, Friday, they're gonna have to pay by the other schedule. So if your pay though is Saturday, Sunday, Monday, Tuesday, then you have to pay by the following Friday. So if somebody gets paid today on Tuesday, maybe they get paid bi-weekly, maybe they get paid monthly, maybe they get paid twice a month, who knows? Maybe they get paid weekly. If that employer has withheld between these amounts in total for all of their employees, because it falls on a Tuesday, they're gonna have to make this payment by Friday. If payday is this coming Friday, let's just say that a lot of people get paid on Fridays. If payday is this coming Friday, the employer is going to have to deposit these amounts by the following Wednesday. Chances are with the semi-weekly pay schedule, they're depositing probably for every pay period, right? If you're a monthly depositor, you may have had 2 pay periods during that month. You may have had 4. You may have had 3 pay periods during that month, right? If you're a quarterly depositor, you've had multiple pay periods during that quarter, right? And obviously, if you're an annual depositor, that comprises all of the pay periods during the year. This one is the most confusing for students, conceptually. It all depends on when that payday is. So, tell me, if payday is on Thursday, when do we have to deposit those taxes that have been collected? The following Wednesday, right. If payday is on Monday, when do we have to make the deposit? The following Friday, right, of that same week, really, because that's the very next Friday. So you can see the IRS wants their money. The more you owe them, the faster they want their money, right? Now there is another pay schedule, but it's only used during paydays, or actually during paydays, where all of these amounts totaled more than $100,000. And it's called the next day. It's just that. So if you have a pay period where the total amount of these taxes equals more than $100,000, the IRS wants their money the next day. Again, it depends on whether, if the next day is a weekend, then it'll be by the next Monday. If Monday's a holiday, then it'll be on Tuesday, right? And we're talking federal holidays here, the IRS holidays, yeah.
How often does it change? Like, what if it was under the 50,000 for one, but then like the next pay period it was over that?
Mm-hmm.
Would they then have to switch it like immediately, or do they have?
Yes, immediately. So if you have a pay period where this totals, an individual pay period where this totals over 100,000, then on that pay period, you're in a next day cycle. But the next pay period, you were at 75,000. Well, now you're gonna go back to a semi-weekly. This deposit schedule is temporary. It only applies to that particular payroll. So when that payroll exceeds $100,000 of payroll tax liability, then you've got to make that deposit the next day. But then you go back to and this happens like end of the year, bonuses, companies pay bonuses, and all of a sudden maybe even if they're on a monthly pay schedule, Maybe they had a really good year and paid out a bunch of bonuses. Well, remember, bonuses are subject to income taxes, they're subject to Social Security taxes, they're subject to Medicare taxes. So they would have withheld on those bonuses, and in fact, a lot of times with bonuses, you actually have to withhold at a higher, not for Social Security, Medicare tax, but income taxes anyway. It bumps you up into a higher rate. So your rate of withholding is higher. But if you've got December 31st, we give out a bunch of bonuses. And normally we're on a monthly deposit schedule. But we gave out a bunch of bonuses, and all of a sudden, these amounts totaled more than $100,000, but only for that pay period. Well, we've got to make that deposit the next day. The day after that pay period happens. And then when we go back to January and everybody's just making their regular salary, we'll go back to a monthly schedule. Okay, so again, this $100,000, the next day schedule is temporary. It only applies to that pay period. Now, there are companies that are always, it would be a regular thing for them. I'm sure DMAC probably is always on a next day cycle. I'm sure Amazon is always on a next day deposit cycle. You know, those big companies that are always paying over $100,000 in payroll taxes, they would be paying next day all the time, right? Does that make sense? Did that answer your question? Other questions? So monthly, quarterly. The more you owe, the faster they want it. Just like the rest of us, right? This is that 1 day rule. New employers or monthly depositors, again, that 100,000 would apply to a new employer as well. So if on their very first pay, yeah, they're a monthly depositor, but on their very first pay, they incur more than $100,000 of payroll tax liability, they're gonna have to deposit it the next day. Okay, let's see. And it would be by the end of the next day, so by the end of the banking day, 5 o'clock. So if we had a payday today that incurred over $100,000 of payroll tax liability that we're gonna have to deposit, we'd have to make that payment by 5 p.m. tomorrow. Make that deposit. Most of these payments are done electronically. There are still some businesses, if they owe $2,500 or less, so if they're filing on a quarterly basis, or they're depositing on a quarterly basis with that 941, they can pay by check. They can do that. Everybody else has to pay electronically. And what employers do is they sign up with this EFTPS system, the electronic funds transfer, electronic federal tax payment system. They sign up with it, they apply for it, submit it to the IRS. IRS mails them a PIN number back, and then they can start making those deposits. I think they still mail it back. So it does take a little bit of time. You can't just start a business and have a payroll and not have signed up for this EFTPS. You've got to give it some time to get registered and everything. There are two ways to do it. Most companies do it directly now. In the olden days, people would actually go to the bank, physically go to the bank with their deposits, and they would give it to the bank, and then the bank would make that deposit on their behalf. The bank can still do that, but most people don't physically go there anymore for that transaction. That transaction is usually done electronically as well. You just are hooked up with your bank. All right. What are we setting out here? Questions. So this again is the deposit schedule. How often do we file the 941s? Quarterly. Right. Not necessarily the same schedule as when we make the deposits of the taxes. Right? So again, just like individuals. If you're an employee, you're paying your taxes, you're contributing toward those taxes that you owe every paycheck through withholding, right? But at the end of the year, you do a reconciliation called the 1040 to find out what you, to match up what you owed with what you've paid. Again, that 941 acts like that reconciliation. The only difference is 941s, 9 times out of 10, you're going to have paid exactly what you owed. Very rare that that happens when we're filing our taxes, right? It's very difficult to actually get down to, oh, I owe nothing and I've got no refund. That it was exactly the same, unless you didn't owe anything. All right. Let's look at the 941. So the first part of this 941 is just the identifying information. You can see right up at the top, this is our EIN. That's where we put our EIN. That EIN goes on every form that we submit to the IRS. Every single form. So for this business, when they file their income tax return, the business version of their 1040, they're going to use that same EIN. That always identifies the business. So just like your social security number identifies you on all tax records, EIN identifies the business on all tax records. So all of this is just the name, if the trade name is any different. So this would be a sole proprietorship here that John Granatelli owns. He owns Granatelli Motors. He'd be the only owner of this particular business. Address, which quarter it pertains to. So you're going to use the same 941 form for every quarter. Now it does change every year. This 941, and you'll see, so let me pull up the one online. So it says here for 2022. Now we're working with 2021 941s. And the 2022 one might look a little bit different. So if you wanted to reference a 941, just kind of have it there, I would suggest you search for a 2021 941, because that's going to be the one that matches the homework problems. Okay, the 2022 may be a little bit different. In fact, it probably is different. We had a lot of payroll tax changes during COVID, many of them temporary, and so this form got really complicated over the last couple of years, but it's slowly going back to what it looked like before, because like I said, a lot of those changes were temporary. But we indicate which quarter, remember again, so if it was January, February, and March, then what day is this report going to be due? If it's the first quarter, when's it going to be due? April 30th, right, by the last day of the month following the quarter, right? If it's the second quarter, it'll be due July 31st, October 31st, January 31st. Okay, those are the due dates. That's when it has to be postmarked. If it's postmarked by that date, okay? I always recommended to, well, we usually did a lot of the these forms for others, for our clients, but if they were mailing them in, because whoever is the responsible party has to actually sign the form, just like a tax form. So if it was an owner of a business, they have to sign the form, and we would always advise them, if they're mailing when they mail it in, to mail it certified, because then you've got proof of when it was mailed. Yeah.
Is this the same way for like LLCs and stuff?
If they have employees, yes. Yep. You only, if you're a business and you don't have any employees, you don't have to do any of this stuff. This only pertains to businesses who have employees. If you're a sole proprietor and you just work for yourself, you're an independent contractor, you do not fill these forms out. You pay in a different way. But if you have, Kelsey here.
Yeah, my brain is not.
That's okay. So yes, only pertains to businesses that have employees. So if that LLC has employees, yes. Yep. Doesn't matter how they're organized. Partnership, if they've got employees, they're gonna file this. C corporation, S corporation, they're gonna file this if they have employees. If they don't have to do this. First thing that you put on here is the number of employees. And this is the number of employees who received wages for the pay period that includes June 12th, September 12th, or December 12th. Now, they've only got 3 there because I think they changed the form in the first quarter. So they would have had a completely separate form for the first quarter of, I think so. Yeah, because if it's, this is quarter 2. So you just go through your payroll records and you count, okay, during this pay period, okay, it included June 12th. Maybe we paid on June 13th, but the pay period went through June 12th, or it went through June 13th or June 14th, but it included June 12th. We're gonna count how many employees we had, and we're gonna put that number there. Okay? You might not have paid on June 12th, but if it included that date, you wanna know how many employees. Line 2 is the total amount of wages, tips, and other compensation. Would include bonuses, would include anything that was subject to federal income tax or Social Security or Medicare tax would be included on that line. Okay? Line 3, federal income tax withheld. How much income, this is the first part here. How much income tax was withheld? Again, chapter 4, we're gonna go through what that calculation is. And this is total for all employees during this quarter. So let's just make up some numbers here. Let's just say we had 15. We paid $150,000 in total in wages. Maybe we had 3 employees and they each made $50,000 during that quarter. Who knows? No, we had 15 employees, sorry. And they made $150,000. Each made $10,000. Federal income taxes withheld. We're gonna list that there, okay. So how much did we withhold from all employees for that quarter in income taxes? Let's just say we withheld $40,000. Whoops. In income taxes. All right, if we didn't pay anything that was subject to Social Security or Medicare tax, which is possible. Remember, not all wages are subject to Social Security and Medicare tax. Most of them are, but we did go through some exceptions. We would check this box. Well, that's not the case here. Now, we're gonna list how much of these wages was subject to Social Security tax. Well, we'll just say all of it. We won't make any exception there. And then we're gonna multiply that by 0.124. Well, wait a minute, this is an employer. Why are we doing 0.124? Anybody have any guesses why we would do that? What's that? You guys are all too scared to speak up?
Is it because you're paying both employee and employer?
Yes, exactly. Thank you, Millie. Because you're paying both employer and employee portion. They're including both of those there. Okay? Sick leave wages, qualified family leave wages, we're not gonna do those. Social Security tips, if we had tips that we paid that were subject to Social Security taxes, we'd add them here. We don't. Taxable Medicare wages and tips. These are the amount, this is the amount that's whoops. Careful of the comma. There we go. We'll say all of it. Again, multiply by 2.9%. Same thing. It's both the employer and employee portion. 4350. Taxable wages and tips subject to additional Medicare tax withholding. So, if we had an employee or more that had during this quarter reached that $200,000 point, we would have some additional wages that were subject to that additional Medicare tax, right? We're gonna say we didn't have anybody this quarter. It's the first quarter, so we'll mark off the first quarter. Oh, we're not marking. Okay, we'll mark off the second quarter. Yeah, something must have changed because you're not even allowed. They won't let you say that it's the first quarter. It must have been something changed on it. So we've got nothing there. Now, line 5E, total Social Security and Medicare tax. Add column 2 from lines 5A through 5D. All right, so 18,600, 4350 plus 18,600, 22,950. That's our total Social Security and Medicare taxes. We're not going to worry about 5F. Total taxes before adjustments, line 6. Now they want you to include line 3. So 22,950 plus the 40,000 of income taxes that we held, so 62,950. All right. A lot of students get tripped up with this fractions of cents. I know a lot of people have, and you had mentioned having a question. So this is where we indicate how much we owe. In a separate area, we indicate how much we paid. Those two aren't always the same. And sometimes you get into some weird calculations. Weird things happen when you're talking about percentages. And when you're multiplying percentages by numbers that include cents, like an employee's wages, for example, $423.79. And then we multiply that by the 6.2% and we get a result. Well, we may have had to round that when we got the result, right? We may have had to round up or down depending upon what that result was on a per employee basis. Well, funny thing is, when you go through and add up in total all the employees, which is what we're doing here, the salaries for all the employees, and multiply it, sometimes we get a slightly different number by pennies. Okay? So let's just say, for the sake of argument, let's go through here. Down here is where we indicate what we paid. Monthly, we'll say we were a monthly, let's just say we were a monthly scheduled depositor because it's easier than going through all that. So 62,950 divided by 3. All right, so 2983, 33. This is a good example actually. 2983, 33. What's going to happen here? This is not going to be a round number, is it? That's going to total up to 99. Times 3, 62,949. 90.
First number. How did you get that?
This, I just divided the total amount here by 3. I'm just making the assumption that we paid in equal amounts each month. Okay, so all I did was I took 62,950 divided by 3. Okay. All right, so the amount that we paid, so this is what we owe, 62,950. But we paid 62,949.99. Those don't match. They have to match. Total must equal line 12. Line 12 has to be, this is total taxes after adjustments, 62,949.99. Or actually this has to be, yeah, 62,949.99. Well, to get this to be this, we're gonna have to subtract a penny. Right? So, current quarter's adjustment for fractions of cents minus 01. We're just going to subtract a penny. If that number, though, is more than about a quarter, you've got a problem, because then it's not a rounding error. It's an actual difference. But this is just forcing it to equal. And that difference is a result of, for each of these months, we calculated at 20,983.33, but then when we total all 3 months together, it comes to a round number. It's just because the difference, it's just math. All right, now we're gonna combine lines 6 through 9. 62, 9, 49, 99. That fractions of cents, I know that that confuses a lot of students. But all you're doing is you're forcing it to balance. You're forcing the amount that you owe to equal the amount that you paid. Only if it's due to rounding though. If there's a difference due to rounding. All right, I've used up all of your time. We will continue with this next Tuesday, okay? So we'll continue doing that. I'll probably, yeah.
Does that mean we get an extension on our homework since the homework's due next Tuesday?
Most likely, yes.
Okay.
Yeah. Yeah, so that you can, but you're already done, Kelsey, so.
I have 14 questions left.
Oh,
Yeah. And that, I'm not gonna lie, that did not help me at all. I'm still so lost.
on the fractions of cents?
Yes.
Okay, let me see if I can real quick put together a
Do you want me to
spreadsheet.
just bring my computer in with my problem?
Yeah.